Welcome to USAWatchdog.com. I'm Greg Hunter, and today we have one of our regulars, I guess I want to call him a regular. He's coming to us from Texas. He has more than 3 decades in brokerage, finance, and also precious metals, if you combine them all together. His name is Bill Holter. Bill Holter, thank you for coming to us today from Texas.
Good morning, Greg. It's always a pleasure.
Now, you are also a financial writer with Miles Franklin. You're a prolific writer, man. You put out 4 or 5 pieces a week, and it's good stuff. I get pinged on my email with the stuff you write. We're going to get into that. I want to talk about some of the things that have been happening in the economy. Employment numbers out last week, and they were a stinker. I mean, if you believe the phony employment numbers, which are waiter jobs and 29-hour-a-week jobs and service jobs. There's no real good jobs, not very many of them anyway. What do you think about the recent economic news about jobs, the 0% growth, GDP growth out of the Atlanta Fed, and these this paltry jobs number? Is it playing into your forecast? The economy slowing down again, anew?
Well, we're probably in recession again. We've pretty much bottom bounced since 2008, 2009. We had an initial jump late 2009, early 2010. We had some growth. From that point forward, the economy's been quite weak. And each time that the Fed came out with QE, we would get a little bit of a juice. The markets would juice, so you would have some wealth effect. And then each time, and actually I'm going to write a piece this coming week on this, each time that the Fed stopped QE 1, 2, twist, and 3, the economy has immediately softened, and you immediately saw the market start to soften. Now we've hit this peak in the stock market, and it looks to me the initial reaction after the employment numbers. It looks to me like we could be breaking down right now in the stock market. This is going to be a really critical week to see whether they can hold the mid 17,000 range.
Do you think that I had Paul Craig Roberts on. He thinks the first quarter is going to be negative, and if you add in true inflation, even the Fed's phony inflation of 0% growth, according to the Atlanta Fed, even their phony inflation, if you put it in there, but if true inflation, we're negative. Second quarter is going to be negative. And do you think there's a couple of camps here? Some people say, I just had Reggie Middleton on, smart guy, and he says that they're going to be forced not to raise rates. Other people, David Stockman, some other folks are saying they're going to have to raise rates. They're just going to have to raise rates. And, the dollar's going to skyrocket if they do that. Corporate America is going to be screaming. I mean, half their sales, half their business for corporate America basically is overseas. What say you about the Fed raising rates? Are they or are they not?
From a credibility standpoint, the Fed has to raise rates. In the real world, I don't think they can raise rates. If they raise rates, my guess is within 2 weeks you'll see all the markets close.
Whoa.
A rate rise, if even a quarter of a point move in Fed funds, would smoke derivatives. You'd see a chain reaction start. And we will probably see a chain reaction start prior to the Fed even having a chance to raise rates.
So you think the markets would just revolt? They would just shut down? I mean, it would just sell off. They'd be forced to circuit break the markets because they'd be, the chart would be going straight down.
Right. You would initially see a big jump in the dollar. Remember, all derivatives are based on there's an interest rate and there's a currency factor to all derivatives. So you're going to you'll see derivatives get thrown right offside. Look what happened after the Swiss dropped their peg to the euro. That basically has tanked the Austrian banking system, which I think we'll probably talk about in a little bit. The Austrian banking system is on the verge of collapse because they lent in Swiss francs, and they did that because it was in low rates. And the fact that the Swiss franc strengthened makes those underlying loans worth or in real value much more difficult to pay back. And that's thrown the entire banking system out of kilter. Now, if you do that with the dollar, you raise rates, and the dollar gets strong or spikes up 5% or 10% overnight, what's that going to do to banks all over the world? It would just create a smoking black hole of derivatives.
So, I mean, so the derivatives, they would just, the Bank of International Settlement says there's a quadrillion. That's the official number.
Right. So
the unofficial number is twice, 2.5 times that. I mean,
right.
Okay. Let's just use the official number. I mean, the official number is a big number. It's 1,000 trillion.
Right.
And you're saying a smoking black hole of derivatives explain how it would implode, how it would go down.
Well, the whole system is interconnected. Bank A does business with Bank B, who does business with Bank C, and right on down the line. That chain cannot break. If the chain breaks anywhere, it fails from that broken link all the way on down. The biggest thing is you're looking at a system that is, you're not marking anything to market. The banks are lying about what they have in their portfolio. They say, yes, we have, for instance, they say we have Greek bonds in our portfolio. That's tier 1 capital. Those are marked at 100 cents on the dollar. That's what these banks are carrying the Greek debt on their books. Now, Monday or Tuesday morning, they have a debt payment coming due. And it's highly unlikely that they can make the debt payment. They're probably going to do some type of a deal with Russia. There was a story out on Friday that they're already preparing to reissue the drachma and exit the euro, or the eurozone. So it's about collateral. It's all about collateral. And if the collateral is not real, if the collateral is not what the banks say it is, then the banks aren't what they say they are. They're broke.
And the collateral, in part, is these derivatives. I mean, people are expecting their insurance, their derivative plays, their bets. They're expecting them to pay off. I mean, they're expecting the counterparty to, hey, we won, you have to pay us, and then it's like AIG times, a million all over again. Where, yeah, we don't have the money. Sorry, isn't that what you're talking about?
Yeah, that's the game. If you hold bonds on one side and you hold a CDS credit default swap on the other side, and it looks like your bond is going to go down the tubes, well, you're telling your regulator, we have these credit default swaps, so we're going to value these bonds at par because we're going to get paid by XYZ, AIG, whoever.
The insurance company. We took out insurance credit default swap. You offloaded your risk to somebody else. So you said, hey, I took out an insurance policy, and they got to pay if they have the money.
That's correct.
And you're saying they don't have the money.
Exactly. So then the underlying collateral, in this case the Greek bonds, what are they really worth? 10 cents on the dollar instead of 100 cents that the banks, the ECB is carrying, they hold 100 billion euros on their balance sheet.
For Greek debt, just Greek debt.
Yeah, just Greek debt. They hold, I believe it's close to 100 billion euros.
And then isn't there derivatives on all that? Don't they have that leveraged up to the moon?
Right. Well, you have institutions that buy CDS versus the bonds that they hold, but then you have speculators that go out and they say, hey, I want to bet that Greece is going to go out of business. I think I mentioned this the last time. CDS is being used as homeowners or fire insurance on your next door neighbor's house, and you're throwing matches over the fence trying to get the thing lit. Because you stand to gain. But the bottom line is, who has forget a quadrillion, who has an extra trillion or 10 trillion or whatever it happens to be, even if you take the Greek debt at 100, well, it's actually 350 billion euros. Let's multiply that by 10. Who's got 3.5 trillion euros that they can pay up to settle for this Greek?
You're saying that's the derivative bet would be 10 times. That'd
right,
be
exactly.
conservative.
Yes.
Wow. So if Greek leaves, I mean, that's not just Greek. I mean, that's just the canary that flops over in the coal mine. And then Portugal, Spain, Italy, France is in terrible shape.
Right.
France is in bad shape. They're running capital controls. You can't get more than €1,000 out of a bank anymore.
Right.
Is that part and parcel to the problem? Is that do you think that the next blow up is going to happen in the eurozone and the euro experiment is going to be over because of the Greeks?
I think the odds are pretty high that the eurozone begins to break up because of Greece. And as a matter of fact, Spiros is in Moscow over this weekend, meeting with Putin. So do they cut a deal? I mean, I don't know. But if they do cut a deal, it'll be Monday morning, Tuesday morning. We'll find out about it. Interesting, I read an article that...
so wait, hold on. I just want to get there. So you think by Monday morning they announce a deal, poof, they're out of the eurozone. That's it. All hell's going to break loose?
It very well could. What I was just about to mention is kind of a canary in the coal mine. The IMF, from what I understand, has withdrawn the people from their offices from Athens. And that was done on Friday.
Why?
They didn't really, there was nothing in the article, but if you use common sense, if there's social unrest, wouldn't the Greeks be looking for any IMF banker they could find and hang them from a lamppost?
Well, the talk is they're going to just take their deposits. They're going to take all the Greek deposits in euros out of the Greek banking system. They're going to leave them with zero.
Well, I read that James Turk did a piece on that, I think it was Wednesday or Thursday last week, and said that the crossover point, there's about 130 billion euros left in the Greek banks, and there's between 80 to 100 billion euros that Greece owes, or that the ECB holds of Greek debt. And once that crosses over, they'll pull the plug. The ECB will pull the plug and force bail-ins. Now, the only problem I have with that theory is, are they really going to do that to widows and pensioners with only 5,000 euros in their account? I think that what I'm saying is I think that crossover point has already we've hit that already. I think if you're talking about just large deposits, 100,000 euros or more, I don't think there's enough in large deposits that could be bailed in to pay back the ECB.
Is this something that we should be watching here in America? Lawrence Kotlikoff, the professor of economics at Boston University, is a famed guy. He's a smart guy, and he's worried about bail-ins rolling over here. He says they'll start over there and they'll come over here. What say you?
I think it's highly likely. I don't think once this goes, it's going to go really quickly. This is, and I've said this before, this will go completely around the world within 48 hours. Now, do they bail the banks in 48 hours? Probably not. But our banks would probably not open. We'd probably have a banking/financial holiday.
That means your credit cards don't work either.
Your ATM doesn't work. Nothing works.
And you think that's on its way this year, 2015? I mean, if Greece says, okay, we're done with the debt, we're not paying this back. You foisted this on us. It's 350 billion years. When this started, it was 170 or something. It was ridiculous. They doubled it. And if they say that's it, they're over. Is it just Greek going to be caused the daisy chain of default, or is Spain and Portugal and Italy and all the rest of the countries going to say, yeah, we're done too. We don't want this. We're out.
Yeah, that's the thought process. I wrote a piece last week called The Greatest Show on Earth about the Ringling Brothers three-ring circus. The three-ring circus is Greece, Ukraine, and Austria. You've got, obviously, the Ukraine, the financial situation. They're talking about they have a payment due in June that they can't pay. They don't have the money. And 3 billion euros of that is to Russia. Those bonds were issued under English law. So they can't They can't just arbitrarily say, well, we're going to do a bail-in, not a bail-in, but we're going to do a haircut, because Russia is not going to agree to it. We also this past week heard news that 50 Abrams tanks were sent from the U.S. on their way to Ukraine. That's terrible news. I mean, that's
going to settle things right down.
That on its own could start a war.
Yeah.
That's from a political standpoint, that's horrible.
The Russians have been, Putin actually been out, and when in our lifetime we heard leaders openly saying we're going to start a nuclear war, get off our borders. You try to take Crimea back, we're going to have a nuclear response. You're going to do something in the Baltics. I mean, this is some scary stuff. It was very underreported last week, and I'm like, oh, when does that not make news? That a world leader with hundreds, thousands of nukes threatens a nuclear response to what the U.S. and the NATO is doing. Is actually to NATO. But the U.S. is NATO. But is that something that is troubling to you? And could that also, I mean, if we have a real hot war where a nuke gets lit off, could that? The financial system, would it survive? I mean, how long will it survive?
Like I said, I don't think 48 hours. I mean, if that war went hot and let's say a nuke was lit up, within 48 hours, the entire system will be shut down. That's my opinion. And you've got the third ring to the circus. You got Greece and Ukraine. The third big top is Austria and the Austrian banks. You've got the credit default swaps on all of that. It's basically the Austrian banking system over a very small payment, over a 600 million with an M, with a little teeny tiny M payment, is what's thrown them off kilter. It's come about because of all the loans that were made in Swiss francs. The franc was revalued higher. So now you've got a whole bunch of loans over in Austria where the loan is valued more than the property itself.
The Swiss franc vaulted 30% higher in 5 minutes?
5 minutes, exactly. And that's thrown the Austrian banking system literally into bankruptcy. And Austria is one of the strong European countries. Austria is one of the AAA rated countries in Europe. So you could have a financial wipeout from any of those three. And we're not even looking at the United States. We're not even looking at the fraud that's going on throughout all the markets in the United States. I mean, there are no markets. Everything is manipulated. The stock markets are held up. You've got the precious metals held down, which that more than likely will change, I believe, sometime in April.
Why April?
Well, because the Chinese are going to bring their physical gold exchange live sometime in April. And that is going to, from my point of view, that's going to bring arbitrage into the game. Now, if you look at what...
in other words, real price discovery outside the realm of London and the COMEX in the U.S. You're talking about real price discovery, real supply-demand metrics.
Right. If you go to buy metal, you're paying with cash and you're getting real metal. It's not like you put up 1 or 2% margin and you're able to control 50 to 100 times the amount of silver or gold. It's a cash and carry market. So what I'm getting at is if the Chinese start to bid the price of gold or silver higher than what it is on the COMEX or on the LBMA, then what you'll have is arbitrage. And that arbitrage is going to end up sucking metal from the inventories of COMEX and from LBMA. The COMEX inventory is almost laughable compared to what China themselves are importing each month. I mean, China is importing somewhere in the neighborhood of 200 tons per month. India imported 100 tons last month. I mean, if India does 100 tons per month and China does 200, that's 3,600 tons a year compared to what is produced of 2,400 tons worldwide. It doesn't add up. There's a 1,200 ton shortfall just with those two countries.
Where are they getting all this gold? And there's been talk about them running out, but they never seem to run out. Where are they getting all this gold, and when are they going to run out? Are my two questions, and that's what the two questions people are probably sitting here thinking. We've been told for years. I mean that they're on fumes, they're on vapors, they're looking like they're going to run out of gold, but they never do. What's up?
Well, to answer your question, where it can only come from where the gold was. And the gold has been in Western vaults. The gold had been in the Federal Reserve Bank of New York. They've even admitted that the gold they're holding now is under 6,000 tons for the first time, I believe, since the year 2000 or just before that. And it's also been coming from London. We saw 600-700 tons have been liquidated out of GLD.
Are they that stupid though? I mean, they're selling low. I mean, are these people that stupid? I mean, anybody with two neurons, team touching together is going to say, well, they're low. I mean, this is what gold's at, at the average high mining cost, $1,200 an ounce. I mean, I'm sure some people do it for $600, but I mean, silver is around 14 or 15 bucks an ounce. With the price of fuel coming down, according to David Morgan, 14 to $16 an ounce. Mining cost, gold's at around $1,100-$1,200 an. I mean, you're right there at mining cost.
Right. To mine silver or gold is not profitable at this point.
And so, but do you think the price at this year vaults higher? And a lot of gold and silver people think for gold and silver. Do you think it vaults higher, and why, or why not?
Well, I don't even think we're going to have a bull market in gold. I've said this all along. I believe we're going to have a markup. You may see a week or 2 weeks where there are big movements in gold and silver. You could see $100, $200 a day up and down in gold. You could see $5, $10 a day up and down in silver. That's going to precede a reset, and I believe the Chinese are going to reset the market.
Does that mean they reset the dollar as well? And let's move on to the Asian Infrastructure Investment Bank, the AIIB.
Right.
And Israel just signed on to the AIIB. I mean, the only ally, one of our staunch allies, not the only one, but one of our staunch allies in the Middle East is going to say, yeah, we're going with China. I mean, what? What does that tell you?
Well, Israel called on the icing on the cake. If you look back, Saudi Arabia had already previously joined. Britain had already previously joined. And I'm going to tell you one that previously joined that tells me a little bit of another story. Taiwan joined. So now you have Taiwan, which means the elder families are on board. That's big. If you go back.
So what's your analysis say? Is that pretend? Why is that a big deal to have both Israel and Taiwan, along with our 40 some odd other nations, Great Britain, China, Germany, all the BRICS countries? I mean, name them, they're there. But why is Taiwan and Israel? Of course, they're two staunch allies of the U.S. supposedly. Right. Why is that a big deal?
Well, because it shows the world collectively, jointly, hand in hand, is preparing to move away from the dollar. They're about to dump the U.S. And these are all supposedly, like you said, staunch allies. Britain, Australia, Saudi Arabia, Israel, France, Germany, they've all joined. And it's in my opinion, it's in preparation to move away from the dollar, move away from the SWIFT system, and contain the derivative damage in the dollar system within the SWIFT system. And that's why they've been working to create an alternative settlement system.
This isn't anti-American. This is survival. This is financial survival. Is that a correct appraisal?
I don't believe it's anti-American. I believe it's because all of these countries want to do business with each other, but they want free, fair, and honest settlement. If Germany sends a car to to China, they want to get paid in something that's real, and vice versa. If China sends something to Britain, they want to get paid in something that's real. And what the U.S. has done over all these years is we've run this humongous trade deficit where we pull real goods in imports and we're exporting dollars. And the dollars that we're exporting don't cost us anything to make. So the world is basically saying we want real and honest settlement, and that's what they're preparing for.
And what does that do to people here who use the dollar every day? What happens? First of all, when's the timing? Is the timing? A lot of people are pointing to this fall that game, set, match. It's over. Some people say, oh no, the dollar is so big, and the SWIFT system, the liquidity of the bond market is so big, and all that that they really it's going to take a long time. What do you say about the timing?
I don't believe it's going to take a long time. As I said, once this thing really gets rolling, it could be a 48-hour time span.
Oh.
And the odds of it happening this year are just ratcheting up every day with every piece of news that you're getting, and every little tidbit of country after country after country preparing themselves to move away from the dollar.
And what does that happen to the value of the dollar after they move away from the dollar?
The dollar will collapse in value. Our standard of living in the U.S. is going to drop 30%, 50% more. Who knows? For us to import goods is going to become very difficult because it's going to take more dollars to import the same goods. And the biggest problem is that our industry to make whatever, shoes, jeans, TVs, it's all gone. We don't even have the ability to make this stuff anymore.
Thank you, Wall Street. Brilliant move. Thank you.
It took 20 years. It took 20 years, and you can go all the way back to the early 90s with Ross Perot with his giant sucking sound. He was right.
He was right.
Yes, he was.
He was right on the money. What happens to gold and silver at that point? Now, you think it's going to happen 24? So someday this fall, they're going to say, "Hey, whoops, AIIB is in business, and we're in business, and at least they'll be competing with the dollar. If not, just people will abandon the dollar on the extreme end. On the other end, they'll just be a competitive reserve currency, quote unquote." So, what happens to gold and silver when that happens?
Well, it's my suspicion that let me back up just a little bit. China has requested to become one of the currencies within the SBO. And in order to do that, they're going to have to reveal how much gold they have. They say they have 1,054 tons. Well, we know that they've got over 1,000 tons every 5 months because they're pulling in 200 tons per month. My suspicion is you're going to find out that China has 10,000, 20,000, maybe even more than 20,000 tons. That alone will rocket the price of gold. But I also believe that China is going to come out and basically remark gold higher, which makes their gold that they hold worth more.
Sure,
I could see them coming out and saying, we will pay 3,000, 4,000, 8,000 or 10,000 per ounce for any and all ounces anyone wants to sell. And that would be your new price. COMEX and LBMA and whatever other paper shenanigans will be thrown in the garbage can.
They'll be obsolete. Boom, out of business.
Right, exactly. Well, and plus you would have their inventories would be sucked right out.
Yeah, the people there would suck out their inventory.
Anybody who's long a COMEX contract is going to say, hey, I want it delivered.
Yeah.
I don't want to get paid in paper. I want the gold, and I'm going to sell it to the Chinese at whatever the number happens to be.
Let's just end with the Middle East. You wrote us something about the Mandeb Strait, the Bab el Mandeb Strait. Most people just call it the Mandeb or Mandab Strait. It's off of it's the entry, the choke point to the Red Sea to the Suez Canal. It's off of Yemen.
Right.
And so, troubling sign there. I mean, the Houthis, which are backed by the Iranians, they have taken over. Last week another military base. They're advancing Also, you have the Hatfields and McCoys. You have the Al Qaeda. They're fighting against them. I guess Al Qaeda is going to be fighting on the side of Saudi Arabia. We're fighting on the side of Saudi Arabia there with at least intelligence and bombing, and helping them, direct their bombs. We're helping Iran in Iraq. And I don't know what Syria turned into. Was that just our bad? 300,000 dead, millions displaced, hundreds of thousands wounded. Wow, that didn't work out very well. Our bad. I mean, what? What? Excuse me.
The bottom line is, this is, if you want to call it, this is U.S. versus Russia. Because you've got Russia backing Iran, you've got the U.S. backing Saudi Arabia.
Well, it looks like we're backing Iran.
Well, we are in Iraq. Our political strategy is lunacy, because here we are, we're bombing the Houthi in Yemen, but yet we're supporting the Iranian fighters in Iraq that are fighting against ISIS. So in one country we're fighting with, and the other country we're fighting against. It doesn't make any sense from a coherent political strategy. We don't have one.
I came up with this as I wonder, and tell me if I'm full of hot air. Back in the 80s, we had, the Iraqis, Sunni mostly. There's some Shia in the east, but mostly a Sunni government fighting the Shia Persians, the Iranians. And I wonder if this is just a replay on a wider scale of just get the Sunnis and the Shia killing each other. Let's see how many they can just kill off. Is that something that would? Are they trying to do that, or does it just look so incoherent? To me, it just looks crazy.
I'm not so. It is a religious war, obviously. But I'm not so sure that's the strategy on our part. In my opinion, our financial system is so far gone, and our leaders know that it's so far gone, and it's going to collapse. They almost have to have a war to blame the collapse of the markets on.
Is this why we're doing what we're doing in Ukraine? I mean, it's crazy. We're just double dog daring the Russians to do something.
Right.
And then we're in the Middle East. Is this why the policy is which looks crazy and bizarre? Is this what, in your estimation, why they're doing it? Because the economy is just so bad, and they know it.
We're trying to start a fight anywhere that we can. It doesn't matter where it is. We need to have a war. It needs to escalate, and then they can let the markets collapse and blame the collapse of the markets, which will happen whether we have a war or not. But they're trying to hold the markets up long enough until they can get a war started. That's my opinion. And
usually, if you want to start a war, you can do that. You can get one going.
We've tried really hard, but if you go back to the end of 2013 with Syria, how was that one diffused? That was diffused by Putin and Russia. They have used enormous restraint to this point. And it remains to be seen whether they'll continue to be restrained or not.
Do you think it all blows up then this year? Is your estimation? I asked people, I've had Jonathan Kahn on. He, from the biblical perspective, he says, September, the end of September, it's Elul 29, it's the end of the Shemitah. It's that's a religious perspective. But I've had other people, David Morgan. I've had Paul. A lot of folks. I don't know if Paul Craig Roberts said that, but a lot of other people are looking at this fall that it will blow this by this fall. Of course, Wall Street will front run that trade. Maybe it'll start blowing earlier. I don't know. What do you say about the timing of what happens this year in 2015?
I don't think we go past the fall. We may not make it to the fall, but I don't see going to January 1st and us having the same conversation.
You don't think this will be a 2016 or 2017? Because a lot of people have been wrong about this. I've had people on. I had a couple of people who were right about it. Catherine Austin Fitz said, no, 2013 won't happen. 2014, I don't think it'll happen. Also, Nomi Prince said that. But, a lot of voices are now saying, well, yeah, they've done crazy things to prop it up, which is why we missed it. But that's ending. Look at the jobs number. Look at the record number of people on no longer in the workforce. You know, it's crossed 93. It's crossed the Rubicon, 93 million. And then the food stamps near records. It's unbelievable.
Well, there's too many hot spots. There's too many things that can blow up. And I do want to mention this before we finish. It's my hope that some sort of truth bomb gets dropped. Our whole system is fraudulent. And the way for the rest of the world to prevent a war would be to call the United States out, to call out the fraudulence that's been done. I've not spoken of this before, but you have to ask yourself, Edward Snowden has been living in Moscow for the last, year and a half. He's not getting to live there for free. I'm sure he's dumped all kinds of classified work. And some of that classified work, I'm sure, goes back to, and actually this came out in Pravda, that Putin is going to bring out some satellite imagery and other proof going all the way back to September 2001.
Oh, we're talking about 9/11 inside job.
Right.
You can't explain to me. I mean, you can't explain to me. I lived there at the time. How in the world did Building 7 just fall straight down? It wasn't hit by anything. It just fell straight down. It just vibrated.
I don't even get to that. I mean, everybody has their own opinion, but were the world to dump evidence, what would that do to the dollar? What would that do to the U.S.? What would that do internally in the U.S.?
There should be some people going to jail.
But would there be any support for us to go to war anywhere in the world? Would the American people support another war?
No.
That's what I'm saying is, my hope is that a truth bomb gets dropped and the veil is lifted. That would hamstring the U.S. from making a war.
Bill Holter, grim news, but to be forewarned is to be forearmed, and I really appreciate you coming here and enlightening us with your analysis. You're a smart guy, Bill. Thank you so much for joining us today on USAWatchdog.com. Bill Holter of Miles Franklin, the Precious Metals People. Thank you, sir.
Thank you, Greg.